Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Thursday, August 11th. Firstly to cable, British pound, US dollar, and here we see a change of trend back to the downside for today's trading. It has completed. Previous day's trading, if you recall, we were looking at that first time frame change of trend to the upside. A candle with a large shadow on the top highlighting the loss of commitment of the buyers at these higher levels. The sellers closing with control on that candle and setting the market up for the change of trend that we have seen confirmed back to the downside today. Sellers in control at the end of today's session. A bear market in all three timeframes, trading down below the Ichimoku cloud, the Kijun-sen and the Tenkan-sen. And this certainly does suggest that in line with the return of the selling in this market on a short-term basis with this black body candle, that there certainly is an opportunity for the sellers to continue selling this market off to test possibly down to this previous swing low at the 128 region. Just looking at the Ichimoku cloud, it has moved down significantly over the last 4 or 5 days, and especially over the last day, and it does weaken the urgency for the market to attempt to retrace. And it does suggest that the sellers are probably in a better position now to continue selling. We certainly haven't seen any strength from the buyers over the last week or so attempting to significantly retrace back towards that equilibrium as suggested by the Ichimoku cloud. If we do see any rally, however, looking to strong resistance to come in at the 131.21 level, and with the Kijun-sen and Tenkan-sen trading just above there around the 131.58.69 region, there is an opportunity for very strong resistance to come in around that area. Importantly, in terms of the Chica span is giving us some mixed results, has been doing so in recent times, and is now within the price action. So it's failing to support the bearish activity that we're seeing in all three timeframes in terms of Ichimoku by trading down below each of these indicators. So suggesting that we could have a potential change in momentum to the upside if we do see any rally take place. So what we want to see is that Chica span clear the price action in either direction, and not likely to see that over the next week or so, unless the market does sell off down through close to this 128 region. And just looking to the bands, and the bands are reflecting that this market has a strong bearish tone at the moment, trading down outside of that lower band. Previously we had the squeeze going on after this very strong downtrending activity, high volatility, leading to a low volatility situation, and now the bands are just starting to widen as we now trend down. Importantly, we had a breakout down below that lower band, but not a strong bearish breakout. This is the first bearish activity that we've seen. Really do want to see the market take out this 128 level if we are going to see a strong extension of this trend to the downside. If we do see some strong bearish follow through for today's candle that is developing, then it will go a long way to confirming a potential extension to this trend to the downside. We do need to also watch the lower band. And as we've seen for the previous day's trading, the lower band holding as resistance, and we do need to continue to monitor that area around the lower band at roughly about 130.25 to continue to hold as resistance if we do see any rally take place. Next to the euro, US dollar, and here previously we saw the market trading within the Ichimoku cloud, and selling coming in today off the back of price rejection from out of the cloud. The sellers have taken control again. The buyers had control previously, and they've shown some strong commitment by trading down through that potential support at the 111.60 level and also through the bottom of the cloud. We are getting mixed signals here continually with this market. Previously trading within the cloud, then strongly rejected from there, and we are seeing something similar happen again. This is also a potential tweezers top type pattern and a potential bearish harami pattern, so looking for confirmation with the next candle to make a lower high and a lower low. Continued resistance may come in at the Tenkan-sen and at the top of the cloud, bottom of the cloud, which trades around this 111.40 region. Very good possibility of selling continuing with the market to test down to the support around the 110.97 level, and with the Kijun-sen trading around there, it does strengthen the support in that region. To the hourly charts with Euro US dollar, and here we saw the market trading well up above the Ichimoku cloud. It was looking overextended. We then did revert back towards the cloud, find support there. We had fulfilled the urgency for the market to retrace, and then the buyers came back into the market with a weak rally trading through the Ichimoku indicators, the Kijun-sen and the Tenkan-sen, but failing to follow through as we tested above there. Then at the end of the session, trading back within the Ichimoku cloud. We are still trading within the cloud. There is potential for a bearish breakout. We do have a bearish market in the medium and fast term timeframes by trading below the Kijun-sen and the Tenkan-sen. Just looking at the bottom of the cloud, which trades around 111.32, it may continue to hold as strong support for the majority of the trading day. And just bearing in mind that we do have a flat part of the cloud around here, and very often we can have false breakouts from flat parts of the cloud. What we want to see, if we do see a breakout below this flat part of the cloud, would be a strong bearish breakout and then strong bearish follow through. Bearing in mind we do have strong potential support just down below any breakout at the first pivot point support level at 111.18, and then down at the second level around 110.97. Any rally is likely to find very strong resistance at the Ichimoku indicators, the middle pivot point level, through to the top of the cloud around the 111.65 region.